Hey, it's Tyrone Jackson, the Wealthy Investor, and thank you for joining me for another hot stock market video in almost real time. Today, we're going to talk about one thing that's been on everybody's mind that greatly affected the stock market, which is Apple stock. Let's dive right in. Now, Apple stock, as you know, is a member of the Dow Jones Industrial Average. It's also a member of the S&P 500, and you're going to ask to yourself, regardless of your level of trading experience, why is the stock declining? In other words, why is it coming off its high of $232 and it's slowly dropping? Well, I have the answer for that. In this video, I'm going to explain it to you. And there's actually money to be made off this stock dropping, but I'll get to that in just a little bit. First, let's look at the long-term trend. You know, I always tell you to look at a picture first, right? If you notice, over a 5-year period, the stock has been rising. 5 years ago, you could have bought in your shares at about $76 per share. Over time, with all the volatility that's going on in the stock market, the stock has a tendency to rise. It is a popular favorite of people like Warren Buffett, and almost every major institution on the planet owns these shares, again, because it leads the index, the Dow Jones Industrial Average, the NASDAQ 100, and the S&P 500. Why the decline here? If we back off the long-term trend and we go into the shorter-term trend, which is year-to-date, all of a sudden this reversal seems pretty significant. Okay? Now, in layman's terms, I'm going to explain to you why the stock is dropping, why I believe it's going lower, and then we'll talk about how to make money when stocks actually decline. The reason the stock is dropping and declining, and I'm going to make this really simple, is because of slowing sales of what? Of the iPhone, the watch, and their desktop. Okay? The reason you're seeing a slowing sales is ever since Steve Jobs passed away, there's been a lack of emphasis on Apple, on innovation. Because when you have someone who runs the entire company based on, oh my God, can you imagine what we can do next? That person sees things ahead of the marketplace, and they were very successful at generating billions and billions of dollars off of that vision. However, what Apple discovered in late 2017 was that at the end of the year, less and less people were upgrading their iPhone, iWatch, and iBook, notebook sales. So what does that mean? If there is a slowing in upgrading and you are not innovating your products, what's going to happen? Your revenue on an annual and quarterly basis is going to start to decline. Now, in 2018, Apple said they're no longer going to give guidance and they're not going to break down unit sales from all of their divisions. That means from product sales as well as iTunes. They're just going to deliver a revenue number. Wall Street said, no, we don't like that. What are you trying to hide from us? And that's why you see the stock making this decline. And what happened just a few days ago, CEO Tim Cook was forced to come out and offer Q1 guidance at a lower revenue number than Wall Street expected. They knew this was coming. He had to come out. And in effect, he blamed a lot of the slowdown on China. Now, let me just explain this to you. We all know that President Trump has instituted these tariffs, right? Which is essentially an extra tax on products coming into the United States. Here's the problem. 95% of Apple's revenue comes from their products that are manufactured where? In China. Well, if you have a slowdown in China and an extra tax, your net profit on your stock and on your balance sheet is going to go down. So therefore, when less people are upgrading their phones, less revenue. The CEO had to come out and explain this. And in my live classes, I've been talking about this for a long time. And people said, Tyrone, why are you bad-mouthing Apple? Right? Because it's not, we're not guessing on how to make stocks go higher. We're following revenue. That's why I always teach you to follow top-line revenue. Because if that revenue starts to shrink, then what's going to happen? We're going to break up with that stock. We call them dates in the Wealthy Investor Program. We're going to call that date as being over. The date is not totally over in Apple. We still have to watch the revenue, but I essentially wanted to have a moment to explain to you why this stock is in decline. And if we zoom in, you see that decline in a much more dramatic fashion here. Okay, so here are two things that I want you to remember. There's actually money to be made when a stock starts to tumble like this. In the Wealthy Investor Program, there are two ways to do it. We do it with selling in the money calls against the shares, but really the big money is made in spreads. Now, there are different kinds of spreads. There are bull call spreads and there are bear call spreads. When I see a stock like this that's in steep decline, here's a 1 month chart, I know to use bear call spreads. Now, if you don't know anything about spreads, this is the time to learn how to use them because they work not only on Apple stock, but other stocks that are in decline. So here's what I want you to do. If you haven't been to thewealthyinvestor.net, visit the website. You'll get the free ebook here, right here on the website called Trading Stocks for Wealth. You have to learn how to trade stocks in an upward market. And once you download that ebook, I have a webinar that's coming up on how to make money when stocks start to decline. Stocks just like Apple and other stocks, when they start to decline, that's when we're going to go into spread. See the steep decline here? That's when we will go into spreads on the stock, and we could make money off of the stock without ever owning the shares. See, what happens is there are a lot of people online who are just like, I've got these great bull market strategies, but they can't tell you how to make money when stocks decline. I know how to do that. So if you haven't visited thewealthyinvestor.net, do yourself a favor, take the free ebook. You'll get a notification when the webinar comes up that's going to show you how to set up spreads without owning shares and to get paid when a stock like Apple actually declines. Now, I'm just going to say this. The amount of money that you make in your life as a trader and as an investor is always going to be based on your education. If you do not have a financial education, you're going to wind up relying on the market just when it rises. But what happens when stocks decline? You see, you need the other side of your financial education to actually be there. Do me a favor, head on over to thewealthyinvestor.net, take the free ebook so you understand how covered calls are to your benefit when stocks are rising. And then you're going to get another email that says, come to the webinar so that I can teach you how to make money when stocks are declining. Okay? So I expect that there are other stocks that are going to continue to decline. If you learn how to use spreads, you will profit from that. But it's all about that financial education. All right, that's my Apple update that's going on right now. If the stock continues to decline, I will send you more videos so that you can enhance your understanding of revenue and its relevance to a stock's performance. All right, this is Tyrone Jackson, the Wealthy Investor, saying, hey, I'll see you over at thewealthyinvestor.net, and it's time to learn how to make money when stocks are in decline. Stay open, stay positive, and I'll see you soon.